Hello learners, my name is Amit Kumar. Today we shall be discussing session 4 for the chapter Profit and Gains of Business and Profession. So till now, the topic which we covered in section 3 were tea development account, coffee development account and rubber development account under section 33 capital AB. Then we discussed site restoration fund section 33 capital ABA. After that we discussed expenditure on scientific research under section 35, in which we discuss meaning of scientific research under section 43 subsection 4. Then we discuss expenditure incurred by assessee himself. So what will be the deduction available for the assessee if he or she incurred expenditure by himself. Then we discuss contribution made to outside agencies. So what are the deduction available if the assessee has contributed money to outside agencies? We discuss in detail. So today we shall be discussing some other section 35 capital ABA, amortization of spectrum fee for purchase of spectrum. So it is defined under section 35 capital ABA. So how the deduction is available we shall discuss. First point, any capital expenditure incurred by the assessee for obtaining any right to use spectrum for telecommunication services either any time during any previous year or before the commencement of business, and the assessee has made payment. It will be allowed for each of the relevant previous years a deduction equal to the appropriate fraction of the amount of each expenditure. The provisions contained in subsection 2 to subsection 8 of section 35 capital ABB shall apply as if for the word license the word spectrum had been substituted. So if a company want to provide telecommunication services, then it will have to take purchase spectrum. So this section is regarding deduction available for the expenses to purchase spectrum. So if any deduction has been claimed in a previous year and the granted to assessee under section 35 capital ABA, and subsequently there is a failure to comply any of the provisions of the section, then A, the deduction shall be treated to have been allowed by mistake, and B point, the assessing officer may again compute the total income of the assessee for the relevant previous year and he may take necessary corrections. So for the above purpose, relevant previous year means A point, where the spectrum fee is actually paid before starting the business, the previous year beginning with the previous year in which such business started, and B point, in any other case, previous year beginning with the previous year in which the spectrum fee is actually paid. Now we shall discuss next section, section 35 capital ABB, amortization of telecom license fees. Required conditions to be fulfilled to avail deduction under section 35 capital ABB. Otherwise, if conditions are not fulfilled, then deduction shall be claimed under section 37 subsection 1. So if the assessee has satisfied the condition of this section, then deduction will be available under section 35 capital ABB. If assessee has not satisfying the condition of this section, then he or she can claim deduction under section 37 subsection 1. So expenditure incurred for acquiring any right to operate telecom services either before the commencement of business or thereafter any time during any previous year should be of capital nature. Payment has actually done to obtain license. So deduction will be available in equal installment over the period for which the right to use license remains in force and starting from the year in which payment is made. No deduction shall be allowed under section 32 subsection 1 of the said expenditure if claimed under section 35 capital ABB. Next section is section 35 capital AD, deduction in respect of expenditure on specified business. So deduction is available only in case of a specified business, which are as follows. Number 1, setting up and operating a cold chain facility. Who should own the business? Any person. Approval, there is no approval which is required. Business number 2, setting up and operating a warehousing facility for storage of agriculture produce. Who should own business? Any person, and approval not required. Business number 3, laying and operating a cross-country natural gas or crude or petroleum oil pipeline network for distribution, including storage facilities, being an integral part of such network. Who should own this business? Any Indian company or a consortium of Indian companies or an authority, board, corporation established under any central or state act. Approval: it should be approved by Petroleum and Natural Gas Regulatory Board and notified by central government. Specified business number 4, building and operating anywhere in India a hotel of 2-star or above category. Who should own business? Any person, and approval, no approval required. However, hotel should be classified by the central government as 2-star hotel or above category. Number 5, building and operating hospital. It may be run by any person and no approval required anywhere in India with at least 100 beds for patients. Number 6, developing and building a housing project, and it may be run by any person, and developing and building housing project should be under a scheme for slum redevelopment or rehabilitation framed by the central government, state government and notified by the board in accordance with prescribed guidelines. Number 7, developing and building a housing project, and it may be run by any person. Developing and building a housing project should be under a scheme for affordable housing framed by the central government or a state government and by a notified board. Number 8, production of fertilizer in India. So any person can run this business and no permission is required. Number 9, setting up and operating an inland container depot or a container freight station, run by any person, and it must be approved as notified or approved under the Custom Act. Number 10, beekeeping and production of honey and beeswax, run by any person and no approval is required. Setting up and operating a warehousing facility for storage of sugar, run by any person and no approval required. Number 12, laying and operating a slurry pipeline for the transportation of iron ore, run by any person and no approval is required in this case also. Number 13, setting up and operating a semiconductor wafer fabrication manufacturing unit, run by any person. It may also be run by any person and for the permission as notified by the board in accordance with such guidelines as may be prescribed. Number 14, developing or maintaining and operating a new infrastructure facility. Who should own this business? An Indian company or consortium of Indian companies or an authority, board, corporation, any other body established or constituted under any central or state act. For approval, the eligible entity has entered into an agreement with central / state government / local authority, any other statutory board for developing, maintaining, etc. facility, also made such proportion of its total pipeline capacity available for use on common carrier basis by any person other than the SSE or an associated person as prescribed by the Petroleum and Natural Gas Regulatory Board. So cold chain facility means a chain of facility for storage or transportation of agricultural and forest produce, meat and meat products, poultry, marine and dairy products, product of horticulture, floriculture and apiculture, and processed food items under scientifically controlled conditions including refrigeration and other facility preservation of such produce. In case any capital expenditure in respect of which a payment or aggregate of payment made to a person in a day except by an account pay check, draft or use of electronic clearing system through a bank account exceeds rupees 10,000, such payment shall not be eligible. Also, expenditure on acquisition of land or goodwill or financial instrument shall also be not allowed. So this point is to promote non-cash payment. Deduction will be 100% of capital expenditure incurred wholly and exclusively for such purpose as per section 35 AD during the previous year. In the year of commencement of business, expenditure which is incurred prior to commencement of operation is capitalized in the books of account of the SSE shall be allowed as deduction. Required condition: not set up by splitting or reconstruction of existing business, not set up by transferred machinery or plant used previously for any purpose. Asset in respect of which deduction is claimed shall be used specifically for specified business for a period of 8 years beginning from year of acquisition or construction. So if asset is used for other purpose, then deduction under section 35 AD shall be stand withdrawn, but after allowing depreciation under section 32, an amount so arrived shall be deemed to be the business income of the previous year in which the asset is so used. Now we shall discuss illustration. So X Limited constructed a building and started operating a hotel of 3-star category with effect from 1st April 2020. The company incurred the following expenditure in this connection. First, capital expenditure including cost of land for rupees 50 lakhs incurred during December 2019 to March 2020, which were capitalized in the books of account on 31st March 2021. Amount 1 crore 10 lakh. Point 2. Capital expenditure incurred during previous year 2020-21. It includes rupees 20 lakhs paid for goodwill. Amount is 1 crore 40 lakh. Compute the deduction available under section 35 capital AD in the assessment year 2021-22. So the deduction which is available: capital expenditure incurred before the commencement but capitalized in the books of account 1 crore 10 lakh will be available. Then we deduct cost of land not eligible for deduction under section 35 capital AD 50 lakh. Remaining amount we have 60 lakh. Then we will add capital expenditure incurred during previous year 2020-21 exclusively for value of goodwill 1 crore 20 lakh. Then our total deduction allowable under section 35 capital AD will be 1 crore 80 lakh. Now we shall discuss section 35 capital D, amortization of certain preliminary expenses with rule 6 AB. So it is allowed to Indian company or a person other than a company who is resident in India. Allowability: expenditure incurred before commencement of business or after commencement in connection with the extension of existing undertaking or in connection of setting up a new unit. Qualifying expenditure will be the following expenses qualify for deduction. A. Expenditure incurred in connection with preparation of a feasibility report, preparation of a project report, conducting market survey or any other survey necessary for the business of the SSE, and engineering services relating to the business of the SSE. Point B. Legal charges for drafting any agreement between the SSE and any other person relating to the setting up and conduct of the business of the SSE. C. Where the SSE is company, also expenditure by way of legal charges for drafting the memorandum and articles of association of the company, on printing of the memorandum and articles of association by way of fees, or registering the company under the provisions of the Companies Act 2013 in connection with the issue for public subscription or shares in or debentures of the company, being underwriting commission, brokerage and charges for drafting, typing, printing and advertisement of the prospectus. B. Any other as prescribed. Qualifying amount will be not exceeding 5% of cost of project in case of all except company 5% of cost of project or 5% of capital employed by company, whichever is beneficial to company. Quantum of deduction: 5 equal installment beginning with the previous year of commencement of business or the previous year in which the extension is completed or new unit commences production / operation. So the deduction will be available in 5 equal installments. Now we shall be discussing section 35 capital BB, amortization of expenditure in case of amalgamation or demerger. So deduction of section 35 capital BB is allowed to any Indian company. That means this deduction is not available to foreign company. Purpose: any expenditure incurred wholly or exclusively for purpose of amalgamation or demerger of an undertaking. Deduction: 1/5 of such expenditure for each of 5 successive previous years beginning in the year in which the amalgamation or demerger take place. Allowability: if deduction is claimed under section 35 capital BB, it is not allowable any other provision of this act or any other assessment year. Now we shall be discussing some other deductions which are available for the SSE, and they can be debited to the profit and loss account. So deductions which are specified under section 36 include the following: insurance premium of stocks, section 36 subsection 1 clause 1. So the amount paid for insurance against risk of damage or destruction of stocks or stores for the purpose of business. Paid means actually paid or incurred according to the method of accounting adopted. So this is allowed to be debited to profit and loss account. Next, insurance premium of cattle, section 36 subsection 1 clause 1a. So the amount paid by Federal Milk Cooperative Society towards the insurance on the life of the cattle owned by a member of the Primary Milk Cooperative Society. Next, insurance on health of employees, section 36 subsection 1 clause 1b. So the any amount of premium paid by any payment mode except cash by the SSE as an employer for insurance on the health of his employees under the scheme framed by the General Insurance Corporation of India or any other insurer approved by the IRDA and approved by the Government of India. Next, bonus or commission to employees, which is defined under section 36 subsection 1 clause 2. So paid as bonus or commission to employees not as part of profit or dividend, allowed only on payment basis. It can be claimed on accrual basis also, subject to the provisions of section 43 capital B. So we shall be discussing section 43 capital B in next session. Next, interest on borrowed capital, section 36 subsection 1 clause 3. Conditions: SSE have borrowed capital for his business, profession or vocation, and interest is paid or payable. Paid means actually paid or incurred according to the method of accounting adopted. Interest on own capital is not deductible. Interest means interest payable in any manner in respect of any money borrowed or debt incurred, including a deposit, claim or similar right or obligation, and includes any service fee or other charge in respect of money borrowed or debt incurred or in respect of any credit facility which has not been utilized. Under section 2 subsection 28 capital A, so interest on borrowing of acquisition of an asset shall not be allowed as revenue expenditure. Such interest shall be added to the cost of the asset. Interest to financial institutions and interest on any loan or advance from a scheduled bank is allowed as deduction subject to provisions of section 43 capital B. Next, discount on issue of zero coupon bonds to be allowed as deduction on pro rata basis. It is defined under section 36 subsection 1 clause 3a. So zero coupon bonds is a bond issued by an infrastructural capital company or an infrastructural capital fund or a public bank of a scheduled bank. Deduction is allowed on pro rata basis spread on the life of such bond. Discount shall be equal to amount payable on maturity, amount received / receivable at the time of issuing the bond, life of bond, period commencing from the date of issue of bond to the date of maturity / redemption of such bond. Next, employer's contribution to a recognized provident fund or approved superannuation fund. It is defined under section 36 subsection 1 clause 4. So it is allowed as deduction subject to such limits as may be prescribed for the purpose of recognizing the provident fund or approving the superannuation fund, etc., as the case may be. Any sum paid in reference to section 43 capital B is such sum payable at the end of the year. It will not be allowed as deduction on due basis unless the payment of the same is actually made on or before the due date of furnishing the return of income prescribed under section 139 subsection 1. In case payment is made later than the due date, it should be allowed as deduction in the year in which it is paid. Next, employer's contribution towards a pension scheme, section 36 subsection 1 clause 4a. So the employee's contribution towards NPS is allowed 10% to salary of employee up to the limit of 10% to salary of employee. Salary includes DNS allowance if terms of employment so provide, but excludes all other allowances and budgets. Next, so any sum paid by employer towards approved fund created for the benefit of employees subject to provisions of section 43(b). Sums received from employees towards certain welfare scheme if credited to their account before the due date, section 36 subsection 1 clause 5a. So the sum deducted from the salary of employee on account of contribution to any provident fund or superannuation fund or ESI or any other fund for the welfare of the employee has to be deposited in the relevant fund under any act, rule, order or notification issued there or under any standing order, award, contract of service or otherwise by the due date. If amount deducted from salary is not deposited by the employer on timely, then it shall be treated as an income of the employer as per section 2 subsection 24 clause 10. Next, allowance in respect of dead or permanent useless animals, section 36 subsection 1 clause 6. So expenditure on purchase of animals otherwise than as stock in trade for purpose of business / profession, less amount realized if any in respect of carcasses or sale of animal is allowed as deduction. Now we shall be discussing some general deductions which are defined under section 37. So in order to claim deduction under section, the following conditions should be satisfied. So there are some conditions which should be satisfied before claiming deduction under section 37. So first condition is the expenditure should not be of the nature as under section 30 to 36. It should not be capital expenditure or personal expenditure of SSE. So the personal expenditure of SSE is not allowed to be debited to profit and loss account under section 37. It should have been incurred by the previous year. It should have been incurred in the previous year in respect of business carried on by the SSE. It should have been expended wholly and exclusively for the purpose of such business, and it should not have been incurred for any purpose which is an offence or is prohibited by any law in India for the time being. So few of the approved general deduction under section 37 subsection 1 are as follows. First, expenses to avail overdraft facilities for the purpose of business. Next, periodical payments to use goodwill. Next, any deficiency of cash found in the end of any day. Expenses for registration of trademark. All expenses to maintain tea gardens. Expenses incurred on purchase, sale, production of goods. General advertising expenses for maintaining in sale of trade. Daily expenses relating to business. Expenses incurred on labor welfare, payment of sales tax and expenses of sales tax appeal, expenses to avail overdraft facilities for the purpose of business, periodical payments to use goodwill, any deficiency of cash found in the end of any day, and expenses for registration of trademark. So instances of expenses not deductible under section 37 subsection 1. So few instances are given below. So there are some expenses which are not allowed to debited under section 37 subsection 1. First, damages and penalty paid for transgressing the term of agreement with the state. Penalty and damages paid in connection with infringement of law. Litigation expenditure incurred for curing any defect in title of assets or completing that title. Litigation expenses for registration of shares, fees paid for increase of authorized capital, expenditure on raising equity share capital and preference share capital may be redeemable. However, expenditure on issue of bonus share is deductible. Amount paid for acquiring technical know-how which is to be utilized the purpose of manufacturing any new article or such know-how is to become the property of the assessee at the end of the stipulated period. Amount expended for acquiring a business or a right of a permanent character or an asset which generates income or for avoiding compensation in business. Thank you.